Hello, today we'll be discussing financial analysis. Um, nasa module nyo ay sa syllabus, mas nauna yung yung cash flows, pero mas unahin natin itong financial analysis kasi mas mahirap yung cash flows. So first, let's discuss the importance of financial statement analysis. So, general purpose financial statements contain historical information about the firm's financial condition, operating results, and other business activities. They serve as the communication link between the company and the various interested parties, such as the creditors, suppliers, customers, investors, stockholders, and management. As these users read the financial statements, they try to find answers to the following questions. Profitability of the business. How much profit does the business earn? Firm's ability to meet its obligations. Does the firm have the ability to pay off its liabilities? Safety of the investment of the business. Is the risk of the investment lower compared to the return that will be received in connection with the investment? And effectiveness of the management in running the firm. These information are obtained by not only reading, but by conducting a complete financial analysis. So financial analysis is used to get answers from the financial statements because the financial statements the financial statements alone are not enough to extract information about a firm or a business. So financial analysis is used to get more information about the business. So we have different techniques in analyzing the financial statements. Three techniques are commonly used to make comparisons or to detect trends. First, we have the peso and percentage changes in financial statement items. Next, we have the common size statements. And the last are the ratios. So first, we'll be discussing these first two because these two are interconnected, while the ratios are a separate discussion because marami kasi sila. So first, let's discuss the comparative and the common size form. Two basic approaches are often used to compare financial statements between companies or between different years for the same company. First is the horizontal or trend analysis, and second is vertical or common size analysis. So horizontal analysis or the peso and percentage changes in statements. This, in, this involves figures shown in the financial statements of two or more consecutive periods. The difference shown in peso between the between the two figures of the two periods is calculated. Sorry about this, it's a mistake. The difference between the two figures of the two periods is calculated, and the percentage change from one period to the next is computed using the earlier period as the base. So first, horizontal analysis requires two or more periods. It is not enough as for information of only one period to make a horizontal analysis. So next is how to do horizontal analysis. First, we get the two figures. For example, we compare the sales of last year and this year. We get the difference. We get the difference of the sales of last year and this year. Then, from that difference that we computed, we divide it from the earlier period. Earlier period meaning last year. So from that, we get the percentage change in the sales in our example. So from what we did, the difference of the sales from what we did earlier is the peso change. And when we divided it, we get the percentage change. So we get, from the horizontal analysis, we have the peso and the percentage change in the statements. We have a different type of horizontal analysis. Trend percentages restate a time series of financial data in terms of a base year. Particularly when plotted against time, this approach allows the analyst to quickly gauge the rate of and direction of changes. So what what we call this is trend analysis. Trend analysis is like horizontal analysis, but it involves more than two periods. It involves three, four, five, or a lot of periods. And uh, when we make trend analysis, it's basically just the horizontal analysis. First, we deduct the figures from the earlier to the consecutive years. Then from the difference, we divide it. We divide it from the earliest year. For example, if we have 2018, 2019, and 2020, if we have figures from those 3 years, first we deduct the figure from 2019 to the 2018. Then we deduct 2020 from 2018. Then from those differences, we divide it from the figure of 2018 because 2018 is the earliest period. And from the horizontal analysis, it is stated here that the earlier period is used. So next we have the vertical analysis, or sometimes called the common size statement. The process of comparing figures in the financial statements in a single period, unlike unlike in the horizontal analysis where at least two periods are required. So vertical analysis doesn't require two periods. It only requires a single period. But you can also make comparisons from between different periods, but it is not required. This involves converting the figures in the statements to a common base. This is accomplished by expressing all the figures in the statements as a percentage of an important item, such as total assets in the balance sheet and total net sales in the income statement. This makes it much easier to compare firms of different sizes, to track balance sheet and income statement relationships within a company over time as its size changes. So, vertical analysis is useful when comparing different companies of different sizes because vertical analysis we express the figures as a percentage of a base, and this base is the total assets when we're using the balance sheet and the total net sales when we're using the income statement. So using vertical analysis is quite simple. We only get the figure of a certain item. For example, we have the cash of the balance sheet. We get the figure of cash and we divide it from the base or the total assets. And from that we get the percentage. Then we do this for every item in the balance sheet until we complete it, then and that's what you call a vertical analysis. So next we have the examples. First we have the horizontal analysis. As you can see, horizontal analysis involves at least two periods. We have 2020 and 2019. So first, we deduct the figures from 2020 to 2019. Uh, from the sales, we have 5,360 less 4,760. The difference is 600, and this is the difference in peso. Next, we have the cost of sales. 4,020 less 3,570, we have 450. Gross income, we have 1,340 less 1,190, we have 150. Next is the operating expenses. Operating expenses is divided into the selling and administrative expenses. From the selling expense, we have 350 in 2020 and 100 in 2019. The difference is 250. 250 increase from 2019 to 2020. And next, we have the administrative. In 2019, we have 150, and in 2020, we have 100. So, instead of increasing, it decreased from 150 in 2019 to 100 in 2020. So the difference of those two is 50. But we indicate the decrease using the parentheses. This indicates that 50 is the difference, but it decreased from last year to this year. Next, we have the total operating expenses. 450 in 2020 and 250 in 2019. So the difference is 200. And last is the income. The 890 income for 2020 less the 940 of income from 2019. We have a 50 difference, but it is a decrease because the income of 2020 is smaller than the income of 2019. Next, we get the percentage change. We get the amount of 600 and the divided from the base of the earlier year of 4,760. So 600 divided by 4,760 is 12.6%. 450 divided by 3,570 is 12.6% also. 150 divided by 1,190 is 12.6%. Please take note that all of these three are the same percentage in the percentage change in difference because commonly commonly uh cost of sales is a percentage of sales, meaning a company sometimes sets its sales price as a percentage of the cost of sales. For example, we made 10 tables, and from those 10 tables we got we spent 500 each. So the cost of those tables is 500. So when computing for the sales price, we want it to be 50% higher than the cost that we used. So 500 times 150% or 500 times 50% is equal to 250. So we want 250 to be added to the cost of 500. So the sales price that we came up with is 750. And we do this for every table, and that's why and from that markup of 50%, we get a constant we get a constant change. So even though if next year we spent 600 but we still want 50% income from the cost. So 600 times 50% is 300. So 900 is the sales price. So 600 less 900 is 67%, while 500 divided by 750 is 67% also. So whatever cost we spend, we always get the same percentage. So that's why all of these three are the same percentage of change. But take note that Not every company has a constant markup. Sometimes it is sometimes the markup are different. So we should compute the percentage of change separately from these three items: sales, cost of sales, and gross income. Next, we have selling. 250 of percentage change of peso change is divided from 100, so we have 250% increase because 250 is 2.5 times more than 100. Next is administrative. We have the 50. Even though it's a decrease, we still get 50, not negative 50. So 50 divided by 150, we have 33.33%. So we indicate here that it is a decrease using the parentheses. Next, we have the operating expenses. 200 divided by 250 is 80%. And last is income. 50 divided by 940, we have 5.3% decrease. So as stated earlier, the amount or the peso change is computed by subtracting the figures from 2020 and 2019. A decrease is indicate I- a decrease in amount is indicated by a parenthesis. Next, we have a percent. The percent is computed by dividing the amount with the figure in the earlier year, which is 2019, because 2019 is earlier than 2020. So from this, so after we finish the horizontal analysis, of course we need to analyze the results. So when looking at the 2020 income statement alone, one could say that Horizontal Corporation did a good job for that year, considering that they earned 890,000 in income. But when using the horizontal analysis, we can see that they actually did poorer than last year. 2020's net income decreased by 50,000, which is 5.3% lower than last year. So why did why did oh I'm sorry. Uh, I used Horizontal Corporation as a first example, but changed it later to FM Corporation. So I'm sorry about that. So why did FM Corporation's income decrease even though its sales increased? Because sales increased from 4,760 to 5,360. So even though the sales increased, its net income decreased by 50,000. So from this we from from using horizontal analysis, we can see that we can see that the decrease of net income can be attributed by the increase of selling expense. Selling expense increased by 2.5 times or 250% when compared last year. So as we can see, the increase of sales from 2019 to 2020 is offset by the increase in selling expense. So maybe the company increased its sales by investing in a more expensive selling plan. So the same type of analysis can be used with horizontal of FM Corporation's other financial statements. So this can also be used. Uh, this can also be used in the income statement. I mean in the balance sheet. So we just need to use the same procedures as earlier. First, we need to deduct the amount from the earlier period to the later period and indicate the amount of change and indicate whether it increased or decreased. Next, we divide the amount of change on peso to the earlier base in order to get the percentage change. So the same procedures are used whether income statement or balance sheet is given. Next, we have the vertical analysis. As stated earlier, it is not required for a vertical analysis to have two periods. But in our example, we use two periods regardless because let's assume that the FM Corporation size increased from 2019 to 2020. So when using vertical analysis, you only need to convert the figures into percentage using a base. So in the income statement, the base that we use is the net sales, is the total net sales. But in this case, there's no total net sales. We only have sales. So we will assume that the sales is already the total net sales. So what do we mean by total net sales? Total net sales meaning the sales figure has already been deducted the corresponding discounts or sales returns. For example, we sold 50,000 pesos in a given year. But from that 50,000 pesos, we gave we gave 500 pesos as discounts to the customers. So we will need to deduct those discounts in order to get the net sales. Another example is assuming that we sell 50,000 pesos again, but from that 50,000, we 10,000 return their purchases. So we have sales returns. We need to deduct the 10,000 from the 50,000. So the net sales is 40,000. So please take note that the base is the total net sales, not the sales only. If if there is if in the problem there's both sales and total net sales, use the total net sales as the base. So first we have the sales. Of course, because the sales are the one that are being used as the base. 5,360 divided by 5,360 is 100%. Next, we have the cost of sales. For 4,020 divided by 5,360 or the base, we have 75%. Next is the gross income. 1,350 divided by 5,360 is 25%. Next is the selling expense. 350 divided by 5,360 is 6.52%. Administrative expense. 100 divided by 5,360, we have 1.7%. Next is the total operating expense. 450 divided by 5,360 is 8.4%. And last is the income. 890 divided by 5,360 is 16.6%. We do this again for the year 2019. 3,570 divided by 4,760, 1,190 divided by 4,760, and so on and so forth, until we get all the percentages of all the items here. So after, oh, we have some notes here. As stated earlier, percent is computed by dividing each individual figure by a base. So for income statement, the base is the total net sales. But in the balance sheet, the total asset should be used. But if the total asset is not given, we can use the total liabilities and shareholders' equity. Please take note that we should use the total liabilities and shareholders' equity, not the total liabilities only and not the total shareholders' equity only, but the combined total liabilities and shareholders' equity. Why? Because the total liabilities plus the total shareholders' equity, when added together, we get the total assets. So total assets is equal to total liabilities and shareholders' equity. So what do we get from the vertical analysis? Well, using vertical analysis, we can see that the firm maintained its cost of sales at 75%. So meaning from the sales, the cost of sales is always 75% of the sales. Next, we have the gross income. The gross income is always 25%. But despite the increase in sales and decrease in administrative expense, selling expense increased from 2.1% to 6.52%, which negated the increases. As a result, income decreased from 19.75% to 16.6% of the sales. So, in this example, we use vertical analysis to compare two different periods. But unlike horizontal analysis, vertical analysis can be used to compare different firms because regardless of the amount of the as sales cost of sales income of a firm, it will be converted in terms of percentage. So it can be easily compared even if we're comparing a small company to a large company. So that will be all for today. We will be discussing the rest of the financial analysis next time. Thank you for today and see you next time.